You think you're paying zero in U.S. taxes, but if you're a self-employed nomad, you're likely writing a check for $18,000 every June. Most Americans abroad treat the Foreign Earned Income Exclusion as a get-out-of-jail-free card. But heading into 2027, the IRS is closing the gap on the one tax the FEIE cannot touch. Subscribe. New Nomad finance strategy drops every week. The Foreign Earned Income Exclusion is the most misunderstood tool in the digital nomad arsenal. Heading into 2027, the exclusion limit has climbed to approximately $133,000. 1-2 key. Most high-earning nomads believe that if they stay under this threshold and pass the physical presence test, their tax bill is effectively zero. However, the U.S. maintains a worldwide taxation system that follows your citizenship regardless of where you choose to live or work. Unlike 2025, the 2026 tax landscape is seeing stricter automated enforcement of the distinction between income tax and social taxes. While IRS Form 2555 successfully wipes out your federal income tax obligation, it does absolutely nothing for the 15.3% self-employment tax burden. 1-2. This is the fundamental trap. The exclusion only applies to the income portion of your tax return, leaving your payroll contributions fully exposed on every dollar you earn. For a nomad earning $120,000, this oversight turns into a five-figure liability you never saw coming until your accountant sends the bill. You're in 1-4. Let's look at the raw math behind the $18,000 trap that catches remote freelancers and LLC owners. If you are a digital nomad running a simple sole proprietorship or a single-member LLC, you are effectively both the employer and the employee in the eyes of the IRS. 5-6. The federal government mandates a 15.3% tax for Social Security and Medicare on all net self-employment earnings. Because the FEIE only excludes earned income from federal income tax, these payroll taxes remain due in full regardless of your exclusion status. On a net profit of $120,000, your self-employment tax liability comes out to exactly $18,360. 1-2 T's. This is cash that Wise or Revolut won't help you save through exchange rates. Many nomads are shocked to find that even with a zero income tax return, they still owe enough to buy a new car every single year simply because they are American. This tax applies even if you haven't lived in the U.S. for decades and have no intention of ever collecting a Social Security check. 1-4. Qualification for the FEIE in 2026 is not a one-time setup. It is a daily commitment to staying away from U.S. soil. To pass the physical presence test, you must be physically present in a foreign country for 330 full days in any 12-month period. 1-8. This gives you exactly 35 days, including travel time, to visit family, attend conferences, or handle business back in the States. One delayed flight or an emergency trip back home in late 2026 can instantly disqualify you for the entire tax year. If you fail this test, you lose the exclusion for the entire $133,000. Suddenly, you are not just paying self-employment tax. You are paying full unshielded federal income tax on your entire global earnings. 1-9. If this is saving you money, hit like. It helps more nomads find this channel. The bona fide residence test is a more flexible alternative, but it requires much deeper ties to a foreign country, like a long-term lease or legal residency in a place like Panama, Paraguay, or Portugal. Just 1-3. Without that documentation, you are tethered to a calendar until you reach day 331. 1-1-8. The solution to the 15.3% trap isn't working harder. It's structuring your business for 2027 reality. 10-11. Sophisticated nomads avoid this by using a U.S. S Corp or an LLC taxed as 1-5-12. By paying yourself a reasonable salary and taking the remaining profit as a distribution, you only pay that payroll tax on the salary portion. For example, if you earn $120,000, you might pay yourself a salary of $50,000. You apply the FEIE to that $50,000, paying zero income tax. Your self-employment tax is then only calculated on that salary, which saves you over $10,000 in a single year. 1-5. However, this requires maintaining a Wyoming or Delaware entity with proper annual filings. 5-12. While a Wyoming LLC costs about $100 to maintain, the tax savings are astronomical compared to a simple sole proprietorship. If you choose to go this route, you must ensure your corporate substance is real, and that you are not just parking cash in an empty shell. 5-9. The FEIE is not always the best path, especially if you are living in a high-tax jurisdiction like the UK or Germany heading into 2027. The Foreign Tax Credit, or FTC, allows you to credit the taxes you pay to a foreign government against your U.S. tax bill. If you are living in Portugal under the reformed FEIE regime or in another high-tax EU country, you may already be paying more than the U.S. rate, a key. In this case, the FTC can wipe out both your income tax and potentially be more flexible for passive income streams. Shasht. Remember, the FEIE only covers earned income like wages or freelance fees. Shash. It does not cover dividends, interest, capital gains, or rental income. Shasher. If your portfolio is built on non-US ETFs via interactive brokers, you need a strategy that goes beyond just the exclusion. 13.14. Using the FTC instead of FEIE can often prevent you from being trapped by the strict 330-day travel restriction, as you are proving your residency via tax payments elsewhere. As we look toward 2027, the IRS is increasing its focus on offshore transparency for the digital nomad class. Tasha Parei. This isn't just about the money you earn, it's about where you keep your wealth. 15. If you have more than $10,000 in total across foreign accounts, including Wise, Revolut, or local bank details, you must file an FBAR annually. 7.15. The penalties for non-willful failure to file can still reach $10,000 per year, wiping out months of your hard-earned savings. 15. Furthermore, if you've set up a foreign corporation to try and bypass U.S. payroll taxes, you must navigate the complex GILTI and Subpart F rules. Stased. These rules can tax you on the earnings of your foreign company, even if you haven't taken a single dollar in dividends. Stay. The goal for any sophisticated nomad is a clean return, utilizing the FEIE or FTC legally, filing the FBAR via the BSA system, and ensuring your corporate structure is IRS compliant before the 2027 tax season begins. 4.15. You now understand the $18,000 trap and why the FEIE alone isn't enough to protect your nomad wealth. Failing to structure your business correctly is the fastest way to lose the gains you've made through geo-arbitrage. In my next video, I'm diving into the 3 specific offshore LLC structures that cost under $500 to set up and are fully compliant with 2027 rules. Subscribe so you don't miss it. It's the legal key to keeping every dollar you save.